Welcome back to the Scrubs and Stocks podcast. This is your host, Ellaine. Last week, I had my free class, and I think that one of the things that a lot of the students or a lot of the nurses think that investing is too risky and that they're just going to lose money. So I want to come on and talk about, is stock market really risky? And I know that risk is one of those things that varies from people to people. Like, not everyone has the same risk tolerance. And I think when we talk about risks when it comes to investing, specifically in the stock market, is that it means losing money, right? So the investment risk is the risk of you losing that money that you work so hard for. And so a lot of people don't invest their money because they have this, this concept perspective that investing means gambling. And if I put my money in the stock market, I'm just going to lose it. And this losing money could happen for various reasons. So some of the reasons could be market fluctuations, like as we know, the stock market prices goes up and down, and there would be crashes like here and there, and it's just a normal part of a healthy economic cycle. That could be one reason of losing money. And the other thing is if you invested in a business and it failed. Like, take for example, I always say this, Peloton stock, like back in 2020, it was the height of the pandemic. Peloton was way up there. It was like over $100, I think, like in stock price. And then now it's literally worth nothing. So yeah, the value of that investment dropped. And so people who invested in Peloton at that time have lost money. And I know that before I had mentioned that you don't really lose money, like quote unquote lose money, until you sell your investments. And I always say, unless you're retiring tomorrow or within the next year, then your money or your investment portfolio has a time to recover in the next coming years if the stock market crashes or if the prices of the investments that you invested on goes down. Now, while I do say that you don't really lose money until you sell, I don't want people to think that there is really no risk of losing money in stock market investing, because there is no such thing as a zero risk investment. There's always going to risk whatever investment you invest on, whether that's like a fixed interest rate, investment, there are chances that you could lose money off of that investment. Now, I also would like to add that losing money in the stock market, you can take advantage of that and use strategies like tax loss harvesting, or it could be a lesson for you to not hold on to stocks that are fundamentally and technically bad investments, right? I have known people who always hold on to stocks that are not good because they have this idea that, it's going to go up in the future, which before, where I hold on to stocks like thinking that they're going to go up in value over the years, and then I have just seen my portfolio go down the drain. And so I was like, you know what? I think it's time to sell this investment. And I think that when you're investing in individual stocks specifically, that you need to revisit your portfolio every now and then to see if it is still a good investment for you, depending on your risk tolerance and your goals. Now, speaking of risk tolerance, you're probably wondering, what the heck is risk tolerance? You've probably heard me talk about this concept a lot, and you've probably heard a lot of financial educators talk about this, because it's really, really important to know what your risk tolerance is. So risk tolerance is just your comfort level when it comes to risk. I would say that there are some people who are leaning more in the conservative side, like more risk averse, meaning that they want safer investments, they want to have predictable returns, and they want to like get the most out of their money without that risk of losing that money. While some people are more risk tolerant, or they're willing to take on more risk to pursue like kind of like a higher gains or returns from their investments. So they tend to invest more in assets that could give them potentially higher returns. But at the same time, these assets fall in the riskier category because they have chances of losing their value over time, if that makes sense. So I think that the number one thing that you have to do when it comes to like this talk about, is the stock market investing risky, is to know your risk tolerance. Like, how comfortable are you sleeping at night when you put in your money on an investment? So chances are, if you can't sleep at night thinking about your investment, thinking about like losing money over time because you invested in a specific asset, then you're probably investing beyond your risk tolerance. And I had experienced this before, and it's investing in an NFT. So if you don't know what an NFT is, it means like non-fungible token. It's just a digital asset in the blockchain technology, so kind of similar to cryptocurrency. So that could be another thing that, you know, we could talk about in a different kind of episode. I invested in this one project, which is I think it's like an ape project. I forgot the name of it. It's been a while. It was like back in 2021, and the money that I have lost from that investment, I kind of have forgotten about it because I don't want to remember it. But essentially, I invested in this project, and then as soon as I invested in it that night, I couldn't sleep. I was like, did I make the right decision to even put my money in this investment? And sure enough, because my gut always like is right, like I need to always listen to my gut more. Sure enough, like a few months later, the whole project like dissolved, and I have lost all the money that I invested in that specific NFT. And that was a really bad investment on my part. But at that time, like I wasn't really thinking about my risk tolerance. And so I think that I had invested in something that is not aligned with my goal and my risk tolerance. But yeah, so that's one of the first things that you have to do if you want to manage your risk while investing. The second thing that you can do to manage your risk is to diversify your investments. So don't put all your eggs in one basket. And even when it comes to my income, like I have my full-time job right now, but at the same time, I also have other streams of income. So that way, if one thing does not work out, I have other ways to make money. And that's the same thing for investments. If one of your investments go down, then you have other assets that are working for you and making your money work for you as well. I always talk about index funds. And if you don't know what an index fund is, then you should have gone to my class last week because I taught about like what an index fund is. Just shameless plug, my program, my signature program for investing in the stock market is open right now, and it's 40% off. And you can enroll with a link below. I have over hundreds of nurses enroll in this program, and they have gotten like really good results from it. Moving along. So diversifying your investments is the second thing that you can do to lower down the risk of you losing money in the stock market. Invest in index funds, invest in individual stocks and dividends. There are ways that you can further diversify your investments in the stock market, although investing in index funds alone already kind of makes your investment diversified compared to just investing in individual stocks. So index fund, by the way, it is a fund that invests in a specific index. So an index is just something that tracks the performance of a sector in the market. For example, the S&P 500 index, which is the top 500 companies in United States. So yeah, so diversify your investments. And then the other thing that I teach in my classes is to invest long term. You know how they say it's more important to have time in the market than timing the market? And that's essentially saying that the longer you invest, the lower the risk of you losing money is. According to BlackRock or Morningstar, you can see in the graph, if you're watching this on YouTube, you can see the graph right here. It's looking like if you are investing in a month, the chances of you losing money is around 38%. And if you compare that to like a longer time horizon, say for example, 10 years, that chances of losing money goes down to 5%. And then going into the 15th year, that chance of losing money goes down to 0.2%. And so that's really powerful. It's also a reminder that patience really is a virtue. And I talked about this being the most important trait that you need to have in order to be a successful investor. So whenever I say that I'm investing, I am putting in money in an investment that I know I'm not going to see for the next 10, 20 years. And I say this to my students as well. And I always tell them that, you know what, you guys, you may not see the returns right now because you've been investing for less than a year, but like 10, 15 years from now, you're going to look back at this investment in education that you did, and you're going to be thankful that you had started investing now, because really it's a big, big difference. I wish I had started investing earlier, and I wish I really did it when I was in my 20s. But you know what? Like, I am happy that I started like 5-6 years ago, because I was able to really build a portfolio that is like over almost $400,000 now. So it's just going to compound over the years. And right now I'm like, even if I don't put money in this investment portfolio that I have, I'm still going to have $1 million when I retire, because I started right now. And if you're listening to this podcast, then I really encourage you to start investing in the stock market and investing in yourself, because years from now, 10, 15 years from now, you're going to look back and, you know, you're going to regret not investing right now. So yeah, so that is another way of not losing money, quote unquote, or managing your risk, is by investing long term. So the final thing that I would like to add on how you can manage your risk of losing money is to have a safety net and build an emergency fund. That way you don't tap into your investments when something bad happens or when an emergency arises. Also, with that said, okay, another bonus thing that you can do to manage the risk, now that I'm thinking about it, is also investing in things that you understand. A lot of people invest in things they don't even know. And by the way, those a lot of people is me when I invested in NFTs and crypto. So yeah, I think that it's so important to educate yourself and have that financial foundation before you start investing. That way you know what you're getting yourself into. And like what I had mentioned earlier, there is no such thing as a zero risk investment. And even not investing is risky in itself. So if you're not putting your money in the stock market, or if you're not investing your money in something that is gaining like returns over time, you are losing its value because of inflation. Granted, like the inflation rates now are much lower, but still, you are losing money if you're not investing your money. And I think that I cannot stress this enough, that investing is essential if you really want to build wealth, because you cannot save your way to millions of dollars unless, of course, you win the lottery, right? So yeah, so again, Employer Money is open for enrollment right now. If you want to learn how to invest in the stock market confidently and have the option to retire early, I would love to have you inside our program. And yeah, you can learn more about it in the link in the show notes below. And I hope that this podcast episode is helpful for you. And I would like to end this episode with a quote from Sarah Parrish, where she says, "Living with fear stops us from taking risks. And if you don't go out on the branch, you're never going to get the best fruit." So yeah, so don't be afraid to take risks.